The Fed just signaled no easy money ahead, and big tech is getting hammered. Accenture, Meta, Adobe, all down hard today. But here's what matters. There's one semiconductor play that's actually flying higher. Let's find out what it means for your portfolio. Let us start with the indices. So the Nasdaq had a rough day today, down 1.34% to close at 26,021. That stings a little, but here's the bigger picture. Week to date, you're still up 3.39%, which is actually pretty solid. The sell-off today is really tied to what happened at the Federal Chairman Warsh came out swinging with a more hawkish tone than a lot of tech investors were hoping for. When the Fed signals rates might stay higher for longer, money flows out of growth stocks. That's just how it works. The Dow Jones also took a hit today, down 0.98%, closing at 51,492. So it's tracking right alongside the Nasdaq. Both got bruised today, but the Dow actually held up just slightly better percentage-wise. Week to date, the Dow is up 3.15%, which is pretty respectable. This isn't a major divergence between the two. They're moving together on the same story. And that story is Fed policy. When both the big tech index and the blue chip index sell off at the same time, it's a risk-off signal. Investors are taking chips off the table. Now here are the top movers of the day. Accenture got hit hard today, down 5.75% to $156.01. And that's on top of an 8.5% loss for the week. That's brutal. The story here is consulting and tech services. When the Fed turns hawkish and companies start saying, we're going to slow down spending, consulting firms feel that pain first. Clients postpone digital transformation projects. ACN is a bellwether for corporate IT spending, and right now the market is pricing in less of it. Meta dropped 5.44% today to $567.58. Now Meta is down only 0.5% on the week, which is interesting, but today's sell-off is real. Meta is a mega-cap tech play, and when the Fed tightens the narrative, growth stocks that trade on future earnings get repriced lower. Add in some profit-taking, and it all adds up. Meta has been strong lately, so some investors are using this Fed event to lock in gains. Adobe is getting absolutely pounded, down 5.33% today to $196.28. And look at the weekly number, down 15.9%. That is serious drawdown in a single week. Adobe is a software-as-a-service play, and SaaS stocks are particularly sensitive to interest rate expectations. When borrowing costs go up, the future cash flows of a SaaS company are worth less in today's dollars. The Fed's hawkish pivot is hitting Adobe hard. Schlumberger is down 5.16% today to $50.33 and down 9.33% on the week. SLB is an oilfield services company, so it's getting hit from two directions. First, crude oil is down hard this week, which makes energy companies think twice about drilling. Second, the broader market is risk-off today. When oil gets weak and the Fed gets hawkish at the same time, oilfield services companies suffer. It's a double hit. Broadcom is the outlier today, and I mean that in the good way. Up 4.3% to $392.90 and up 5.59% on the week. Broadcom is a semiconductor and infrastructure play. And here's the thing, while the Fed is hawkish on rates, there's still massive AI infrastructure demand. Data centers are being built, chip makers are benefiting, and Broadcom supplies the networking gear that makes it all possible. So while big tech consulting and software are getting crushed, chip infrastructure is holding firm. That's the divergence. Now let us look at energy and fuel. Oil slipped a bit today, down just 0.54% to $75.64. Not a huge move on the day, but zoom out. Look at the weekly chart. Crude is down 15.98% this week. That's a serious pullback. Demand concerns are creeping back in. The global economy is showing signs of slowdown, and when people start wondering if factories are going to slow down, energy prices come down with them. Supply is stable, but it's demand that's pressuring prices right. Natural gas dropped 2.47% today to $3.16. a bit steeper than oil on a daily basis. Week to date, it's down only 0.63%, so it's not nearly as weak as crude. This one's more about summer weather and storage levels than anything geopolitical. We're heading into the season when people turn off the heat, demand normally drops, and those storage tanks start filling up. That structural seasonal pressure is keeping a lid on prices. Moving on to metals. Gold pulled back 1.02% today to $4,286.70 per ounce. Now, that's a small move, right? But here's what's interesting. Week to date, gold is up 4.34%. Gold is doing what gold does when people get nervous. When the Fed sounds hawkish and uncertainty creeps in, investors want a safety net. And gold is that safety net. Even though the dollar might be getting stronger on higher rate expectations, people are still buying gold as insurance. That 4.34% weekly gain tells you investors are worried about something. Silver moved down 2.65% today to $68.05. A steeper drop than gold on the day. But here's where it gets interesting. Silver is up 5.34% on the week. So silver is actually outperforming gold week to date. This makes sense because silver has two personalities. It's a safe haven like gold, but it's also an industrial metal. When people think about manufacturing and demand, they think about silver. So silver going up more than gold suggests that some of that buying isn't just fear, it's also folks hedging on industrial demand longer term. And finally, let's look at tomorrow. All right, so what's ahead tomorrow? No major economic releases on Thursday, so the market's probably going to sit with this Fed narrative for a bit. Chairman Warsh just changed the entire tone, and traders are recalibrating. Watch for any comments from other Fed officials. Market's going to hang on every word. And keep an eye on the tech stocks tomorrow. If we get another down day, we might see some support levels tested. But here's the good news. The week is still green, and Broadcom proved today that there are still pockets of strength if you look in the right places. Stay focused on the long game. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.